Hello and welcome to the show. Today we have with us the entire top management of Tata Steel Group, a company which ranks in the topmost steel companies in the world. But it's a difficult time right now, and the entire management is here to take us through the measures that they are taking to combat and tide over the situation. Welcome to all of you. And Mr. Muthuraman, starting with you, first of all, you have announced your consolidated quarterly numbers, and it came as a bit of a positive surprise, if I can say that, for analysts, as they were expecting negative numbers, but it turned out to be positive. You've made a little bit of profit. Can you take us through the key factors which actually gave the growth?
You see, as you rightly said, times are indeed very difficult, and the present times have descended on us very quickly. But I believe the Tata Steel as a group has enormous fundamental strength. There are three fundamental strengths of Tata Steel, to which we added one more during this time of the storm. And the three fundamental strengths are: we have a geographical diversity. You know, we are present in growth markets, we are present in mature markets, we are present in Southeast Asia, India, Europe. Second is we have good product diversity. We are into railway products, we are into aerospace, we are into engineering steels, we are into construction steel, we are into automobile steels, packaging steels. So there is a wide array of applications and segments of markets that we serve, which does give us a certain amount of insulation from ups and downs. And the third is part of our group. The Indian operations have a solid raw material ownership. And to these three fundamental strengths, and I would actually add one more as a fundamental strength, which is a culture of continuous improvement across the group in India, in Europe and Southeast Asia. And when the downturn sort of started hitting us sometime in October, November, we took some very, very quick actions. Quick actions of weathering the storm, conserving cash, doing only that capital expenditure which is absolutely necessary and which will give us immediate results. Then a big, huge saving program, primarily in Europe, right, and of course in India also. So we took actions immediately and we implemented those actions, and I believe what we are seeing as quarter 3 result is a result of those immediate action on the back of these 3 or 4 fundamental strengths that the group has.
Right, you have enumerated a few points, and some of them would not last for too long as well, so we'll delve deeper into them later. But coming to you, Mr. Warren, a lot of pain has come from the European markets. As we understand right now, the steel business, India is not that big a problem as the Western world, and especially Europe in our cases. Now, how long is this pain expected to last? What are you seeing from there?
Well, what we see today is in Europe, difficult market conditions. We are in a situation where the demand is down 40% from what it was 1 year ago, probably about 50% on the construction market and 30–35% on the automotive market. So we think it will take the first calendar the first half of this calendar year to reduce the stocks with our customers. And in the meantime, we have taken reactively some actions to idle some blast furnaces and adjust our level of production.
Right, more actions expected. You've taken 40% production cut that you're saying pretty much will be stable till June this year. That's what you're saying. And you have taken some layoffs as well. So are these, more of these rigorous actions are expected going forward?
Well, I think we are doing a lot, not only on the short term, because we adjust our production to the level of demand, but also we are going for more structural actions. We had a number of plans that we intended to do anyway in time, but we've decided to put them forward and announce all these plans, which have led to loss of potential jobs for 3,500 people.